Okay, I still think there's some little issues here with the sharing. Just give me one short
Mm,
second that I can see.
That maybe you can try again.
Don't worry that we will get that. It's just I think otherwise I just share my screen. That's also totally fine. You know what? I'm gonna just share my screen in this case, and then I just switch to the presentation. So one short second. And can you all see my screen right now? Can you all see the presentation? Ivan, can you see the presentation?
Yes, we can see it.
Perfect. All right, then I'm gonna go into the presentation mode. So I hope you guys can still see it. If there's anything like also with the sound, just turn on your microphone and please feel free to interrupt me. But I think, like Ivan mentioned, this is a very special topic today because usually CCAI is really focusing on real tech and not on the business side. So I'm really happy to have the chance to present some of my research here today. And what we realized is that especially AI startups in climate tech, they're usually fantastic founders, technical founders, but sometimes there's a little bit of a requirement and need to support on the business side. And even some researchers, they're really excellent on the technical side, but if sometimes it's very difficult for them or they feel like it's overwhelming to deal with all the business side, especially with fundraising. But this talk really has the purpose to, first of all, help early stage founders with some guidance on how to structure a fundraising pitch deck, especially seed and Series A. But I guess most people are more early stage here. And then secondly, this is also very important for researchers or people in the field who may be thinking about starting, but they're not really sure how they can execute their startup idea on the business side. So this is also here to help them with that. And feel free to reach out to me after. But without further ado, let's dive into it. So what I've been really working on the last couple of years doing research on this is why do you need to have a good fundraising pitch deck, especially for climate tech startups, and what are the common elements you always need to consider? So, and I'm going to go very shortly through this, and then I'm going to go through the main deck here. So make sure you have a short deck. Don't send investors a deck which is more than 20 slides. You can have follow-on slides or like a backup deck, but usually make sure you have only like some information within the slides so that's not overwhelming them. The second part is the branding. Have a consistent branding there, have clear and structured fonts, and always follow a clear logic for every slide you present. And obviously, always follow up with investors if you present your pitch deck. So, with that being said, let's focus on investors, especially VC investors who are very likely to invest into your startup if it's AI driven in the climate tech startup world. What are their characteristics? So, first of all, investors don't have much time. So they get hundreds and maybe even thousands of deck depending on the VC fund per year. So that means they are maybe not exactly the expert within your focus area. So you cannot expect that they're very passionate about that. So they really have to be prudent with and diligent with their time. And that it is why it's so important. And really remember this when you send out a pitch deck. Make sure you don't send it as a cold email. Try to network with the VCs before getting touch with them. Try to reach out to them via LinkedIn. Try to see them in person uh, on conferences or on seminars. Or even if you don't have that, maybe just try to go to their office and see if they have time for a short coffee. They always need to get good deal flow, so they always appreciate to talk to founders. So make sure then if you have those 5 or 10 or 15 minutes that you present very well. And that's the purpose of this presentation here. So based on our research, really well received fundraising pitch should follow this kind of structure. and we will dive into each of those sections. But this is something we have done over 2 years of research, talking with more than 50 venture capital investors investing in AI and climate tech, but also startups who have successfully raised and not successfully raised rounds, what their learnings and best practice approaches were. And this is like a combined version for this. So let's, before we jump into this, what are the most important slides for that? If you're early stage and if you're a seed stage startup, make sure you are really paying attention to your market slide and to your team slide, and this is really focused on AI startups. So usually you have like a software component to it. So make sure you also have a clear strategy on your unit economics, and I explain later why that is so important. But you can see there are some similarities, but there are also some very strong differences between a Series Seed pitch deck and a Series A pitch deck. So usually seed pitch decks are shorter, 15 to 16 slides, and Series A pitch decks are to 19 slides. But you can see that here, don't send more than 20 slides. I said that before, but it's a mistake I always see again. If investors see a pitch deck with 50 or 60 slides, believe me, they will not look through that. They will just delete the email or just not really go thoroughly to the pitch deck, which you have spent so much time on. So don't try to make this mistake. So let's start with the first slide you need to have, the mission slide. So why is the mission slide really important? Because it sets the tone by communicating the company's vision and background. And think about that. If you present to a VC in their office, you usually have that slide at the beginning, and what you want to do is you want to communicate your message, what you're doing, within one short sentence. This sentence should not be too high level. So you want to solve world hunger. It's like too broad. Make sure it's specific, but it's also short. So this is a challenge. I know it's sometimes very difficult, but make sure that you can do that. And I'm gonna show you an example on how that could look like. So for example, turning textile waste into resilient fibers to reduce CO2 emissions of the textile sector, with your company logo on that front here. So this could be a great slide you show when you start introducing yourself and your team, because VC investors will especially pay attention and will try to first get an overview and a grasp of what kind of topic and you're working on. So again, be short and be concise here. So what should AI startups consider? And we only have 20 minutes, so I'm going to go very, very fast through that deck. So make sure if you have questions, like I said before, reach out to me after and ask more questions or connect to me on LinkedIn. What is very important is position AI as a transformative tool for addressing climate change, especially in your company. So you have to make sure that AI really is of value, and that you leveraging AI provides a value to solve a specific problem. And I'm going to show you that what that means in the next slide when you talk about the problem. So when you talk about the problem, really make sure to highlight the pain point you're solving. This is really crucial. Quantify the problem. So make sure to explain to the investors how big this problem is. This also relates to the market size later. And explain who has that problem and why it matters to them. So are they willing maybe to pay for that problem, to solve that problem? And that's obviously, are they willing to pay you in the future if you provide a solution for that particular problem? Again, here, try to avoid long text. This is how a sample slide could look like. Again, quantitative numbers here, and you don't even have to address only one problem. You can address, I would say, based on our research, 2 to 3 problems. If you would do more than 3, it's a little bit like too broad. So I would really focus on maybe 1 to maximum 3. This is our experience. And then you can mention down there some people who have that problem, who have some really powerful quotes that, well, they are really having that pain point and that they have a need to solve it. So for AI startups here again, that's what I just mentioned. It's really important that you highlight why it is important for you as a startup. So why does it make sense for you as a startup to leverage AI to solve this problem? This has to be very clear to the investor, because what investors see right now, there are a lot of, or like nearly every startup is saying they're an AI startup just to get funding. So really be precise why your problem which you're trying to solve really requires that AI approach or that AI technology you're solving. So this is really important to consider. Then highlight the solution. So really showcase your innovative approach on providing a bridge from the problem to your offering. And in that slide, it's also going to be like a slide where you provide 2 to 3 USPs of your technology. But what you need to do here is really to showcase how how you leverage AI to provide a solution for that problem. So this is like this kind of logical story from your mission, problem, and the solution. So AI startups, and I'm just going to focus on some points here. What you really want to consider is here, and this is what I mentioned, you're not just applying AI for the sake of AI, you're applying AI because it really adds some value. It reduces costs, it increases inefficiency, it increases time of production or whatever it is, but showcase the 2 to 3 USPs here. This is really important. So after the solution, you're gonna go a little bit more into detail and say, okay, you are gonna offer a discount on this solution, but what is your product? So really in this slide, explain how your solution works. This is your product. So give a short overview of your product. And after you have done that, make sure that you show a flow chart or even a short video which shows to the investors this is the way our product works. So this is the input, this is what we're doing, and this is what the customer gets out of that product if he or she buys it. And this is the last point, is very crucial. So really make sure that you memorize this one, because that's what we're seeing is always a problem and always usually forgotten by a lot of startups. Explain to investors how they can integrate, or how you want to integrate your solution, your product into the customer's organization and workflow. If you have a great product, but it's very hard to integrate for the customer, even though it's a great product, they will not purchase that product. So also make sure that you have an explanation on that step. This is how it could look like. You have some features of your product, then you have a workflow and a video or whatever it is to showcase what you're doing. And again, what you need to show in this case, because you want to understand, the VC investors want to see what is so special about you that you understand the customer's problem. You want to or you want to show in this case to the VC investors that you are understanding the customer. So you talk to the customers, you have done primary market research, and you know exactly what the pain points are, and you know how the customers' workflows are operating in their company. So you know how to integrate your product without much effort for the customer into their organization. This is very crucial here, especially for AI startups. So you talked about your product, but you also obviously need to show investors that you have a great technology, or that you have a great IP. So what you want to do is you want to showcase that your technology and your IP is not easy to copy. So you have you really need to showcase the defensibility of your IP, and you can do that by several points. You can outline the patents you have filed. You can outline why you have like a special kind of customer insights, which is hard to find for other competitors, or hard to get from other competitors. And you need to showcase that very clearly to the investor. Um, Again, here as an AI startup, make sure you really point out the AI related technical differentiators you have over your competitors, existing competitors, and also future competitors. This is something a little bit more tricky, but you also have to anticipate what is coming the next 2 to 3 years in that market, what will happen in that market, and that you are prepared for it, that you're competitive in the long run. Then you have to convince the VC investors why is the timing right now for your service or for your product. And you can do that by showing this is how it's used to be done. Now there is like a breakthrough, and that breakthrough could be your technology, that could be a policy change, especially in AI, and this will be the new way. And you're equipped to provide insights on the new way. This is crucial to really show because you don't want to or you don't want to get the impression, or you don't want to give the impression to the VC investors that you're too early, that you're already too late. You really have to convince them the time for your product is right now. We're gonna skip that for now because we're short in time, and Ivan, I know I have to really hurry up a little bit here. This slide, I mentioned that before, is really important, so I'm gonna spend a little bit more time on that. You have to convince the investors that the market size you're operating in is large enough. So there's always a very big misunderstanding. Everybody, what I see, a lot of pitch decks, at least right now, is all the AI startups in climate tech, they're showing to the VC investors, look, we're targeting a 4 billion, 1 billion, 10 billion US dollar market. Most of the VC investors, they're very skeptical if you provide that logic because it's very hard to go from zero with limited resources in your stage into a $10 billion market and outcompete the existing players there. So what you usually should do and what investors prefer, you target a smaller beachhead market here, which has a size from 50 to 150 million. It can be a little bit smaller, it can be a little bit larger, but it shouldn't be also too small. And you say, look, this is the beachhead market. We have done a lot of primary market research. We have done a lot of customer interviews. We know that this customer group really wants and needs our product. And as soon as you have conquered that market, you're going to use that market to create cash flow, to create traction, and then you expand into larger markets. And this is usually a strategy what VCs really love and what they really love to hear. So when you calculate the market size, you need to show, like I said, a certain level of TAM, total addressable market. There are two ways to do that. A top-down approach, where you take industry reports or other existing knowledge or industry research and calculate how large the market is. I would not recommend you to do that because that shows to investors there's nothing new. So what you really need to focus on here is that you, based on your primary market research and that you're really well connected to the customers and you understand the customers, you do a bottom-up analysis and calculation of your TAM. And that is usually done by identifying the number of end users in one market. That could be your initial beachhead market or one of the larger markets. Then you estimate the revenues that you make of each of those customers on an annual basis, and then you just multiply those two numbers, and that gives you your TAM, but based on a bottom-up analysis. But this shows to the VC investors you really understand the market and you have done your research. This is very convincing. Just quoting or referencing McKinsey reports or BCG reports is not enough, at least for 99% of the cases. There's some other things you need to consider, like market dynamics, regulations, and a CAGR, but those are just minor points. But there will be definitely some questions from VC investors on that points as well. So this is how that could look like, what I just explained. But as we're straight on time, I'm going to skip a little bit here. And after the market, what you need to do is you really need to focus on the competition. And for the competition, I think everybody who worked from you guys in the startup world before, there is the 2x2 metrics you should really focus on. I'm going to show that one briefly to you. So you list the pain points of your customer, which you have identified, and then you compare yourself to the existing competitors in that segment. So ideally, you're going to be on the top right corner of that matrix. But if you're not, and it's clearly that you're not there, don't try to put yourself in that top right corner. You can put yourself even below competitors, but explain to the VC investors what you do and what you will achieve in the near future to outcompete those competitors which might be right now before you. So this you have to be very honest about that, because VC investors, they're very likely to do also research on your market, or they already know your market very well. This is another form. You can compare features. That's especially important for AI startups. So what kind of features do you offer, or prices do you offer, which outcompete or which make you like really better than your competitors? This is another way to present this competition slide. So after the competition, you're going to jump into the business model, and I'm going to be very really brief on this, even though this is important. You're going to focus on your go-to-market strategy. So how do you generate revenues? This is very important. And then you're going to explain your pricing model and your revenue model. So you have to really explain to VC investors, is it a cost-based or a value-based approach? Happy to share with you some more information on that. And then usually your pricing strategy is like, it's like a software as a service. It could be a product sale. It could be a subscription model, or it could be for, usually for, that's for hard tech companies, a recurring offtake agreement. If you are targeting international markets, if you're not staying just in your domestic market, make sure you outline that. And that's more easily doable for AI startups, because obviously the costs of goods sold are not that high. So you have a high profit margin. You need not too much capital to expand, but it's still important to explain that strategy to your VC investors. This is how it could look like. If a marketing funnel, and then if a sales funnel, and then you convert those customers into cash for your company. That's one way to do it. That could be like your pricing strategy, how you can outline this. This is your internationalization strategy as an example slide. And what you really need to consider here is, and I'm going to focus on that later on, unit economics, how you achieve a certain cross margin, payback period, and so on. But this is something I'm going to focus on later on. So, like I mentioned before, the team is extremely important, because at an early stage, well, obviously you have your technology, but you don't have much traction yet. So the skills of your founding team are most important. And what we really want to see is a good mixture between business founders and technical founders. Only technical founders, I mean, great technical founders is essential, but just technical founders without business founders is very hard. And ideally, you have some founders involved which have domain experience in the market you're trying to target. This is very important. This is how it could look like. You have the founders, you have your strong key hires, you have some people who advise you, as well as some people, and this is important to see, how many people do you have in the tech, in the R&D department, in the product and marketing and sales. This is also important for VC investors to understand. So when it comes to traction, there I'm going to focus very briefly on the 5 points here, which are I think very relatable for you guys. The most important, or well, most valuable characteristic of traction for VC investors is sales and customer pipeline. So did you sell your product to customers? If you have achieved even 2 or 3 deals, that is great, especially for a seed stage startup, because you want to show that there's interest in your product and your service. Consulting projects, R&D contracts are great. Use cases, pilots are also good. References and LOIs, that's something you have to be very carefully about, because it's just a letter. There's no binding purchasing order behind that. So usually LOIs are not really respected by VCs. It shows maybe a little bit of traction, but it's just a piece of paper which says maybe I buy it, but there's no real intention behind that. So ideally, you can get like an LOI with a binding purchase order, which shows to the VC investors, okay, this customer really commits to buy that product if you achieve certain milestones. And finally, but also very important, if you have published any papers, coverage in journals, or you have maybe even done some interviews in credible media. This you can show a deal pipeline from leads to deal negotiations to deal closed, and the consulting projects you're working on. But for the sake, we're going to jump and go a little bit faster, and I'm happy to really answer questions after. So in terms of the financials, you have to provide short-term projections of your financials, long-term projections, which are usually 3 to 5 years, and especially if you do AI and climate tech, make sure you have a good techno-economic analysis involved. Sometimes it's not really needed, but if you have also a strong hardware component of your business, I would recommend you to do a really good TEA analysis as well. And I just want to see, this is something how you can show the financial slide, but you can also just show like your projections within that slide. So this is totally fine. So here, this is also important. Manage or at least mention that you made some investments in AI research and development, because you don't want to just show that you use your technology and not further work on it, but that you're always updating your technology. This is something you really want to showcase. But, and this is something also very important where we see a lot of mistakes, it is crucial that you not only invest the money you raise from VC investors into the technical development, also invest into the business side. So how to achieve sales, how to build a good sales engine, and to find those customers which at the end pay your service or pay your product. This is very crucial that you have a good balance of spending here. So, and this is one of the final slides right now, or actually the final slide. At the end, you have presented your startup, so you want to make sure you have a good fundraising ask. So the investor wants to know, what are you looking at right now? So you want to make really clear, and I think the next slide shows that very well. You're now raising, for example, a Series A round. You want to have like a 10 million round size for a $80 million valuation here at the top left. And then below, and this is very crucial, make sure you explain to VC investors how you want to use the money and what are your milestones in the next couple of years. So you, for example, you can say we use of the $10 million raised, we use 2 for product development. We use 5 million to increase sales and to scale our business, and so on and so on. So this is very important to show what you want to do with the money and set yourself milestones and don't change them. Investors want to hold you accountable in 1 or 2 years after you raise the money if you were able to achieve those milestones. And this is actually really important to show to later or follow on VC investors. If you can show you have achieved the milestones you have set yourself 2 or 3 years ago or 1 year ago, you can show your previous round and you can also show current investors. So for AI startups, very much, and this is what I mentioned before, showcase that you invest into further develop your AI technology, but also don't forget about the business side. This is very crucial. And then finally, and with that I ended, there's some more to it, but I really keep it short. Make an outro slide where, especially at conferences, if you present your startup, you have a QR code there. People can scan your LinkedIn and you can connect with them and see if they're interested in working with you. That could be potential customers, could be potential partners, or it could be potential investors who want to get in touch with you, but because there's so many people, maybe don't have the time to talk to you. With that being said, I'm gonna stop sharing right now, and I'm happy and open it for questions, or Ivan, I first hand it back to you. But I hope that was helpful for you, and feel free to ask me anything you have on your mind.
Thank you very much, Oliver. So I will stop like a recording from now, so you can actually feel free to ask any questions to Oliver. Thank you very much.